Hello and welcome to the Earmark Podcast. I'm your host, Blake Oliver, joined today by Ron Baker. Hi, Ron.
Hey, Blake, how's it going?
Great to see you. Great to talk to you.
You
I
too.
have been enjoying your book, Time's Up, the subscription business model for professional firms. And that's what we're here to talk about today is the subscription business model, and specifically how accounting and bookkeeping firms can benefit from this. Uh, I was an early adopter of the subscription model. I had fixed fees on a monthly recurring basis in my firm, and it really changed my life. It enabled me to build a firm very quickly and sell it. So I've experienced it. I didn't really, though, have like a theory, a grand unified theory of what I was doing when I did it. I just sort of did it. But reading your book has like added a lot that I was missing, and I actually wish I could go back and do it again now with this knowledge.
Yeah, so do
Honestly.
I, by the way.
And we should say that you're not just a thinker and a writer. You are a CPA, or you were, and you started in KPMG, and you had a firm, and you had a long career serving clients, and so you've got this rich experience and background in developing all of this theory. So I guess that's a long-winded way of saying welcome to the show, and I'm eager to talk to you about the subscription economy.
Yeah,
So
me too. Thrilled to be
let's
back.
let's start with like defining it. So when you say subscription economy, what does that mean?
Subscription economy was coined by Teen Zhou, the founder and CEO of Zora, the software company that runs a platform for subscription-based businesses. And it's projected to be $1.5 trillion by 2025, the subscription economy in aggregate. And that's from the USB Bank, I think, or USBC Bank projections. And if you look at most of the unicorns out there, they're all subscription based. And we're just seeing a tsunami out there of subscription based businesses. Teen says in 5 years, you won't own anything, you'll subscribe to everything. Now, I don't believe that. I think in 5 years' time, you will have the option to subscribe to everything. And whether or not your firm does anything with this model, it's going to be confronted with it because your competitors are going to be offering it. I can't hear you, Blake.
Sorry, Ron. I
Oh,
may have a little bit of a glitchiness going on in my
okay.
side
No worries. Wonder if it's my
at
side.
this moment. But back. Do you hear me okay?
Yes, I do.
Okay, great. So when I think subscription economy, I think Netflix. I think Amazon Prime. I think actually of all the streaming services that I am required to be subscribed to, as the parent of a kid who consumes a lot of media. Disney Plus is
Disney.
one of them, which Disney, hey, that's a great service. They've got all the Star Wars stuff on there now, so it's really for the adults too. I think ESPN you can subscribe to. So what does subscription look like in an accounting firm? Let's say I've got a traditional firm where I'm billing by the hour, I'm billing after the fact. Like, how is that different from what you're talking about?
Right. If you kind of look at the evolution of our business model in the profession is hourly billing is pricing based on inputs, right? We're charging for the inputs. How much effort did it take? How many hours? What kind of activity? When I entered the profession, we were kind of in this hybrid mode where we would give a fixed price, at least for the audit work, sometimes even the tax work if it was bundled. And that was charging not for inputs, but for outputs. Here's a defined scope of work. Here's what we're going to do for the price that we're charging you. If something comes up that's outside of that defined scope, of course, we're going to have to go to the Department of Paperwork and get a change order and have it approved by 6 different levels and all of that. And then value pricing came along and we taught that, you don't price the output, you price the customer because value is subjective. Every customer is different. They have their own value drivers. Value is contextual. So depending on what the customer is trying to do, so you price the customer. Subscription's different because you're pricing the portfolio and you're pricing the relationship, not the customer. And people say, well, that's semantics, Ron. What's the difference between pricing the customer and pricing the relationship? Actually, it's a huge difference. If you look at the way, even value pricing, has been implemented by firms, we're still pricing the outputs, Blake. And it's frustrating because that was never the intent. The intent was to price the customer and the transformation, but people didn't go that far with it. So when you look at three options that firms give, it's all based on scope of work.
Right.
I think subscription can blow that up. And it's not based on the scope of work because the services are just a means to an end. That's not where our value lies as CPAs. We are so much more than the scope and sum of our services. And we don't provide more value by adding services, piling them on brick by brick by brick by brick. Our real value comes from transformations. And that's what the subscription economy forces you and insists that you look at and design. What kind of transformations can you provide to your customer?
Okay, so let's dig into that because that seems kind of vague. And when I think of pricing based on services, I'm thinking, okay, in my accounting services firm, my bookkeeping firm, we'd say, okay, we're going to do your bookkeeping write up on a monthly basis, and that's this price, fixed fee. Okay, we're going to do your bill pay and your payroll and your bookkeeping, and that's all packaged into this price here. Maybe we add a tax return. Maybe we add a little bit of advisory work. That's what you're talking about when you say we're pricing the scope of the services.
Right.
Okay, so how do we change that? Like, what would I be doing differently if I were pricing the relationship?
Well, this is something each firm's going to have to design on their own because this is where strategy and positioning comes in. So, and that's not something that you plan. That's, strategy is designed. So it depends on what your goal is for your firm. Do you want a lifestyle firm? Do you want to scale it? All those different considerations. You can still have pricing tiers, but what I'm saying, and my North Star for our profession, because I think there's so many parallels between the medical profession and what we do, are the direct primary care physicians and the concierge doctors. By the way, I don't want to leave them out because they're the ones that charge the real premium prices. They're the Disneys of the medical profession, the concierge doctors. And what they do is they say, you subscribe to our practice and you're covered for anything that you need that we can do. There's your constraint that we can do. You're not going to go to a DPC and get oncology treatment for your cancer. You're not going to get cardiac surgery. You're not going to do all the things that they would refer you to a specialist to do. You're only going to get something that a GP can do. Now, so the goal is, if you say to the customer, hey, whatever you need that we're capable of doing and that we do, that's in our wheelhouse, that's in our core competency, you're covered. You're
Got it.
covered. They get audited, you're covered. They get a notice from different states, they're covered. Whatever it is. Now, I guess
Well,
you could tier it and you could say for like a smaller firm that say did CAS, and let's say they do tax and some advisory. Okay, you could say in the first tier, you're in the CAS tier, but that means we'll do anything that you need that's included in our CAS scope of work, in our
you,
scope of competencies.
you're basically eliminating a lot of the scoping that had
Uh,
to happen
it
previously.
completely.
And
It blows up scope.
I love that because if you don't have scope, you can't have scope creep.
Exactly.
And
It
that's
doesn't
the
matter.
yeah.
We get all caught up in, oh, did we spend 10 hours on that or 6 hours? And oh, that means we lost money. We both know that's BS. It doesn't change the cash flow by one penny, whether or not an accountant spends 10 hours on something or 5 hours. That's not even the right way to look at it.
Right.
The right way to look at it is take care of the customer, make it convenient, surface simplicity, give them peace of mind, and give them absolute convenience. Because I promise you, they're comparing you to Amazon Prime and Disney Plus and Hulu and Netflix, and they're having their expectations raised because of that. And I think our customer experience has really suffered. I mean, you look at the average NPS score in the accounting profession, it's 23. Apple's is like, I don't know, 80 something. BMW, Porsche's in the 80s. We're at 23, Blake.
Yeah.
What does that tell you? It's and So when I say my North Star is the DPC, the direct primary care, I just want to emphasize that Amazon's making a major move in this space. They just bought One Medical for $3.9 billion. I don't think it's gone through yet. I think it has to be approved, but they're going to pay around 3 something billion for it. This is the largest DPC practice in the United States, and they just bought it. And I just saw they have a website. You can sign up for 1 year if you're a Prime member for $144.
$144.
Yep. It's a special price for a special time period.
Wow, I might need to sign up for this because it's getting kind of challenging to book an appointment with my primary care physician.
I'll give you an example. In October last year, I tried to get an eye appointment with my doctor appointment with my eye surgeon because I needed a new pair of glasses and my subscription or prescription had expired.
Yeah.
And this is October 1st. He couldn't see me until January 29th. And I pitched, I complained, and she said, well, I can get you on December 29th. I said, great, I'll take it. I had to go to another doctor, get, blah, blah, blah. I saw my doctor, who I love, by the way, and I said, Doc, tried to get in here to 5 months. I said, you got too many patients. I said, either you give me a subscription plan where I can cut to the front of the line, or you've become expendable in my life. You're either indispensable to your customers or you're expendable. And he's become expendable. I love him, but if I can't get to him when I need him, what's the point?
Yeah, that's the problem with fee for service. We see it in medical, which is the only way to make more money is to do more services. And so in the medical profession, you see doctors rushing you in and out of the office so that they can get you done.
Yep.
And they're not developing a relationship with you. They're not spending time with you. And we really see that in accounting too. Firms that are doing a lot of volume, doing, say, tax returns, it's impossible to have a relationship when you've got thousands of returns you're doing or hundreds, whatever it is, the principle's the same, right? You're just trying to get them done so you can bill for them. But in a subscription business, you can spend more time with each of your customers because you've priced in the capacity.
That's correct.
And that's why I think one of the big objections to subscriptions is, well, how do I, if I'm not billing hourly, how do I make sure that my team doesn't get completely overwhelmed? How do I deal with the capacity problem? Because I might sign somebody up and then they're going to ask me for the world and I didn't price it in there and I didn't, how do I protect my team?
They can't ask you for the world because they can only ask you for things that you're competent to do. And if you're focused on transformations, you can only usually guide maybe 1 or 2 transformations in a year anyway. I mean, because otherwise you'd overwhelm the customer. They don't have the bandwidth for that either.
Yeah.
I'm just not worried about that. I worry more about the customer needing things and going somewhere else than I do about them overloading the team. What if they go to some other consulting firm? I mean, how many times do we see consulting expense on the income statement, right? So you see accounting and you go, okay, that comes to us. And then you see this consulting expense that's 5 times what they pay you. And you say, what's this? Oh, well, we hired so-and-so to do such and such. And we sit there and say, oh, well, we do that. Oh, you guys do that? Well, whose fault is that? So I think it's backwards to worry about the capacity constraint. Plus, the other thing is you're limiting the number of customers that you intake. For example, the average primary care physician in the United States has a panel of patients of 2,400. And that's why you get to spend 5 minutes with them, because they've got to see 50 or 60 patients a day. That because they're in that fee for service treadmill. And I would argue, and I'll die on this hill, we are on the same fee for service treadmill. I don't care if you're hourly billing, I don't care if you're value pricing, you are on a fee for service treadmill. We get paid for what we do to the customer rather than what we do for them. Mm-hmm. Because it's all based on services. Do your tax return. Oh, you added 10 employees? Well, then the scope changes and we have to go to the Department of Paperwork. I mean, we've created a bureaucracy to some extent with value pricing that subscription just overcomes, because it just says, look, if you need it and we can do it, you're covered. We're going to get it done. Right. And if we can't do it, we've got specialists in our social capital network that will get you to, and we'll quarterback the relationship. But it's all about the relationship. So the average patient, or the average doc in the United States has 2,400 patients. The average DPC physician has 600. Just to compare that, the average concierge doctor has between 50 and 100 patients. Now, so concierge doctors would charge you about $30,000 a year.
Right. Yeah. My parents just signed up for a concierge doctor for one of these practices you describe, and they love it because they can get an appointment within days instead of weeks or months. And the office will not only take care of everything they need when they're there, but will book follow-up appointments, will make referrals to experts, will follow up on that, do all of the kind of administrative stuff that has been pushed onto patients, which I is a much better experience, right? So,
Totally.
um,
It's going to change the way we have healthcare delivered in this country,
but how do
especially
we
with Amazon moving into it.
but how do we reconcile that with the shortage of doctors and the shortage of accountants? Because what you're saying is to deliver this type of subscription, we've got to have a ratio that is 4 times smaller than it is now in terms of patients to doctors or accountants to or clients to accountants. How does that work? Not there just aren't enough of us to go around.
And why is that, Blake?
Why aren't there enough accountants?
Yeah.
Well, there's we could talk about that all day long. I
Yes,
mean,
we
there's
can, but it's
yeah,
because we bill by the hour and we're in a fee for service treadmill and we're
yeah,
burning out people. We're eating our young. You talk about this every week on cloud accounting. We are eating our young because we put
yeah,
them in a fee for service model.
yeah,
GPs are in short supply too. They are. But
yeah,
I think the DPC and concierge models are what's going to bring more people into that practice. It would be the same for our profession. If I
yeah,
came out of college with uh, a degree and I was offered to go into a big eight where I'm going to have to track every 6 minutes of my day like a prisoner, or I can go to even a small firm like a 6-person, 9-person, 10-person firm, and I can do transformations. I can actually have client contact and not be overwhelmed. Do one job after the other, after the other, after the other, and focus on efficiency and utilization and all that BS. What's going to be more attractive for our
yeah.
future? This is not just about a business model at the micro level. This is about at the macro level too. I think it's the only thing that's going to be able to attract talent into our profession.
Yeah, that's true. We like to rag on the 150-hour rule on the Cloud Accounting podcast, but
And I agree with you. That
it
needs to go. I don't know
right.
why we still have that, but
But
that doesn't solve the problem.
y-
Once you get the CPA, you go into and this is the big four firms. That's the grist mill.
yeah,
That's where we're all taught. For not everybody, and certainly more in my day than in yours. Okay, and I'll admit that. I mean, my goal was to get in a big eight. That's all. I didn't want to go to a regional. I wouldn't even have considered it, but you go into those firms and you realize this business model sucks. And
yeah,
it's the
it's
same today than when I joined the profession in
yeah.
84.
That was my least favorite thing about joining a big firm. I went in as a manager after I sold my practice, and I had to account for. Fortunately, it was just 0.25 hours at a time, not zero point 0.6. So that was an
Right.
improvement.
Yes.
Uh, but it was still a challenge, and the hardest thing for me was just not having enough time in the day to actually make a meaningful difference for the clients that really needed my help because I had to be so miserly with my time, especially on the smaller ones, and the startups were the ones who needed me the most,
The most.
right?
So,
And I got to spend the least amount of time with them.
so
And
here's the thing. If you ask anybody, why did you become a CPA? Why did you become a doctor, lawyer? Ask any professional, architect, actuary, you name it. 2/3 of the time or more, they'll say to help people. That's it, to help people. Well, you can't help people if you have 1,000 customers. You just can't. You're kidding. We're all kidding ourselves. Relationships don't scale.
yeah,
There's a Dunbar number there that we can only handle about 75 people, really. Um, and we shouldn't put any more burden on that on any one knowledge worker,
yeah,
especially if we want to move to guiding transformations, which is the highest point in the value curve. There's
yeah,
nothing higher than changing the customer because when you take a customer from where they are to where they want to be, the customer's the product. The services are a means to an end. It's not about the services. It's not about the paperwork and the financial statements and the bookkeeping and how many transactions did you have. None of that matters. What matters is you're taking them from where they are to where they want to be, some desired future. And we can do it over, over, and over. And we can do it from womb to tomb. We can do it from the moment they're born for college planning to estate planning when they're gone. That's powerful. Not many other businesses can do that.
yeah.
Accountants can do it.
And something that I think is not spoken of enough um, when we talk about subscription and moving to this type of model. It's not just good for the firm owners and the partners, it's really good for the staff. And and ultimately, yes, I think I agree with you, Ron, that the problem we have in the accounting profession is the business model. The business model is fee for service, hourly, and it's not fun. It's not exciting as a young accountant to be stuck in that business model, just making widgets, making hours, right? It's we want to be part of something bigger. I mean, that's what everyone talks about with the younger generations, right? They all want to make a difference in the world. I don't know if that's true or if that's just, the BS that we spread about younger generations, right? Like, but I feel that way. I want to make a difference. I think everybody wants to make a difference.
I did too. I mean, I
Yeah.
wanted to know what was beyond the audit, and it never got that far. It was always just, no, just move on to the next job.
Yeah.
Don't have any impact with the client, don't have any conversations with them about what we can do beyond the audit or the tax return. It was just move on to the next job, move on to the next job. You were jumping from one job to another. Um, yeah. The thing is, if you look at doctors, they have a burnout rate at 51%. And this was pre-COVID. And you ask yourself, why would doctors burn out at 51? 51% is a lot. That's a big number. Now, I don't know what it is in the accounting profession, but I know it's up there. And if Blake, if you took light bulbs and screwed them into your house and half of them burnt out, blew out, would you blame the light bulb or would you blame the electrical system?
I
And the
blame the grid. Yeah.
the electrical system is the business model.
Mm-hmm.
And we're putting these young, really smart kids through this who went through, practically a master's degree to become a CPA. And it's not what they entered this profession to do. So finally, now we have a business model that aligns our rhetoric. Oh, we care about the customer, the relationships, everything. We want to be your trusted advisor, but we monetize every transaction. So there's this
Yeah.
disconnect in the business model between what we say and what we monetize. Subscription cleans that up and aligns it. And now these really smart people can do what they entered the profession to do, which is to help people. We just
Yeah.
need to help people. Yeah. I mean, we call it transformation or what, but it's just really helping people achieve their dreams, to help them search for potential. I get so tired of hearing about how we solve problems. Yes, we're great problem solvers. We're going to continue to do that. I have no problem with it. That's fantastic. But if all we're doing for our customers is solving their problems, we're just reverting them back to the status quo. We're not advancing them, and we can advance them, and we can do it over and over and over. And until we do that and message it that way and communicate it that way, I don't think we're living up to our full potential.
Yeah. So going back to the firm that wants to change to this model, let's try and make it a little more real. Again, one of the objections commonly is, well, if I don't have the hourly, if I don't have the fee for service model, then how do I do this? And you talk in your book about creating portfolios of customers, segmenting them into different portfolios. I think that's the term. And then pricing, by type of customer. And that seems like something that would be actually fairly easy to do with the data that most firms have, because let's say you're doing a bunch of CAS work or accounting bookkeeping work, or you're doing a bunch of tax work, you can probably bucket your customers into a few different tiers, or easy, medium, difficult, or give them scores or something like that, right? There's a lot of different ways to do that, and your team probably knows how to do that. And then it's a matter of assigning them a price and kind of aligning that with the revenue you're bringing in today, right? Look at what you did last year in terms of revenue that you did on a fee for service basis and figure out how to create a subscription that roughly approximates that.
Yeah, I mean, I want to propose this model because I think it's a model that gives us more pricing power. I mean, if we go to the market with a common offering, and let's face it, most CPA firms' offerings are common. Oh, we do CAS, we do some advisory, we do tax. It's a common offering. You're going to command a common price. If we go to the market with an uncommon offering, what Walt Disney would call a plus offering, and we continue to plus it, by the way, like the concierge docs and the DPC docs do, then we can command uncommon pricing.
Yeah.
So I don't think it's unrealistic to take your prices and double them or triple them or quadruple them with a plus
Right.
offering, because you're giving peace of mind, you're giving convenience, you're giving that just like your parents have with their doctor. You're, saying most doctors I've read about do same day appointments. I mean, they always have capacity for their customers because they don't have as many customers. Um, but I think what really, once you get beyond, once you figure out what your purpose is, and I'll just take that as a given, then you start to move into strategy and positioning. And the big thing about strategy is it's it's about what you don't do. A
Mm,
firm,
yeah.
a CPA firm is defined by the customers it doesn't have and the services it doesn't provide. And too many firms try and be all things to all people. They want to be Morton's, they want to be McDonald's. Oh, and by the way, we have a vegan menu as well. And if you try and be all things to all people, you're nothing to nobody. So the more you're niched, then all of a sudden, if you're niched really narrowly, like I have a buddy who does nothing but dentists and only a particular type of dentist and only of a certain size, charges them all the same
Yeah.
because
And
everything's on the rails.
and that's where the falling of geographical barriers really has made a difference. And I feel like a lot of firms still haven't made that transition. It seems natural to those of us who have grown up in our careers in a world where we can serve clients all over the country, all over the world. But there's a lot of firms that are still just regional and they're
Absolutely.
only sourcing clients locally. And to me, it makes sense that you would need to do everything for everyone because you've got a limited client base. And so you don't get the choice of I'm only going to work with dentists necessarily if you're in a small town. You got to serve all the business owners. And now, though, I can be in Youngstown, Ohio, and I can serve clients in all 50 states, uh, assuming that I can get around all the regulatory hurdles of being a CPA firm, and maybe I won't be one, right? But I can
Right,
do that.
right.
It's all doable. You can do it. You can serve them
And
anywhere.
Blake, by the way, it was doable before the internet. My buddy who built his dental practice did it. He founded it long before the internet came along. And to this day, he barely has a website and he doesn't use social
Referral based.
media at
Yeah.
all. It's all referral based because he goes and talks
Yeah.
to dental schools. He writes in the things that they read. He goes to the conferences that they go to and speaks. And everybody knows this guy, from the people who sell equipment to the dental practices to the insurance people, and everybody knows him. So he's very, very picky about who he brings on. And
Well,
he's a sole prop, by the way.
the large firms, it's not like they don't do that, or the regional ones. Because they have their experts. They'll have a
They do.
partner who just does this thing. Maybe they only do business valuations, and that partner is the person in the firm who does that, and then they'll basically get somebody who does everything. Right, that's the goal of the firm: is you eventually acquire all the expertise so you can do everything that any client could possibly need. But what is not working there is that you never really know as a client what you're going to pay for anything until you have the service done, right? So
Right.
it's sort of
I
like,
think the other
yeah,
thing that doesn't work there is the false belief in economies of scale. The bigger we are, the cheaper the cost that we can do things. And there is no economies of scale in this business. It's a human capital business, for crying out loud.
yeah,
Um, so and also the lack of collaboration, because those big firms are nothing really but silos.
yeah. It was just
Subscription,
it's a bunch of small firms that all use the same logo, you
exactly.
know?
And and there's no collaboration. So the subscription blows up the silo because now the customer is at the center of the business. And if a big firm did do subscription, I don't think, we might never see it, by the way. But if they did, then whatever that customer needed, the the firm would just, circle the firm or circle the customer and do whatever they needed from
Well,
whatever
well,
area of expertise they needed it from.
well, here's a crazy idea. This comes from Hector Garcia. I was doing a stream with him for a series we're doing called Build a Focus Firm. And he told me something I never heard before. He calculated that if you take the gross domestic product of the United States and then you divide it by the number of accountants in the country, you get something like $19 million in revenue per accountant in this country. That's how much revenue there is for each one accountant. on average. Um, and so the idea is also that you can then calculate a percentage of all the accounting fees, like as a percentage of gross domestic product. And if you do that, it comes out to about 0.5%. So our country, on average, right, we pay about 0.5% to get all the accounting done. That's the like the credit card fee, right? We all pay 2 to 3% as businesses for the privilege of collecting credit cards. Well, effectively, businesses in the U.S., from small to large, on average, pay about 0.5%. And I was thinking, if you're a large firm, you could do a subscription model where you just charge a percentage of revenue. Like the investment advisors do this, right? They don't charge for every service that they provide. They price you based on how many assets you have that they manage. It's not how much time they put in, and they do great. They're the ones who are really enjoying life. Like why doesn't anyone do that for accounting?
Well, at the big firm level, there's two problems. Problem with that, and the problem even with subscription is it would impair independence. And if you offer a test work, that would impair your independence. So you can't do that.
If you charged a percentage of revenue and that included the
Correct.
audit.
Correct. You couldn't
Yeah.
now. So you'd have
But
to do what Amper Eisner did. Spin out
yeah.
the attest function and just do that under a separate cover, and then maybe do everything else based on these different models.
Yeah. But you could do the tax work, you could do the accounting services work, the bookkeeping work, the advisory work. You could do it all for just a percentage of revenue. You could say, up to this revenue threshold, it's 2% of your revenue, right? For the smaller firms, you got to charge. For the smaller companies with less revenue, you'll charge a little more, right? And then as they get bigger, you give them more of a discount or whatever it is, right?
Right.
I mean, the reason I'm bringing this up is because this is actually how I used to gut check my own pricing. I wasn't I wasn't advanced enough to do this when I had my firm. I would still price things out based on the services we were doing. But in
Sure.
the end, when I looked at the final number, I would take the annual fee I was going to charge my client, I divide it by their revenue to figure out what my fee was going to be as a percentage of their revenue, because I knew that's what they were looking at. That's how they were thinking about it,
Absolutely.
right?
Yeah. Yeah. I did it too. I mean, I had this, it's a heuristic, right?
Yeah.
What percent of revenue and all of that. It's a gut check. Absolutely. It's not the driving factor of the pricing, but it's a gut check.
Yeah. Well, and what I like about it is that uh, it grows with the business and it can be automated. So you don't have to deal with the emotions of pricing customers and the complexity of it. It's very simple. And
Right.
and that is something that, I think it's a barrier most of the time. So if maybe that's the way to do it. If you're listening and you're trying to think, how do I do all you can eat bookkeeping services? Maybe you just charge between 0.5% and 2% of revenue on every client.
Well, well, with the caveat that, a lot of bookkeepers deal with startups and that don't have any revenue, and you're still
Yeah.
adding, in fact, sometimes
It,
you're adding even more value to
you could have
those
a
types of
floor.
entities.
You could have a
Yeah. Yeah.
floor on that,
Yeah,
right?
all firms
And a
should have minimum
ceiling.
prices. All
Yeah.
firms should have minimum prices. But the objection I get and people say all you can eat, and it's not an all you can eat business model. People equate it to Netflix, and it's all you can eat of the type of food that you serve. If you're Morton's, you're not going to give somebody McDonald's or a vegan plate, right? They came into Morton's. A
Right, right.
brand can only stand for one thing. So it's the strategy and the positioning is critical. But if you're
Well,
really focused down, then this becomes much easier to give everybody even the same price.
another way to deal with capacity, I don't know if I told you this example, Ron. There's a company called Design Pickle that's based
Hmm.
here in Scottsdale, I believe, where I live. And they offer unlimited graphic design services for a
Yep.
fixed monthly fee to small businesses. And you wonder, how can they do that? And it starts low. I mean, when I used them, it was like starting at $500 a month, unlimited design services. But here's how they deal with capacity: the scope is unlimited, but you can only submit one work order at a time.
Time.
So
Sure.
the designer, and there's always designers available. They have a pool of designers. Now you're assigned one. If they're not available, it'll go to somebody else. But you get your designer. So you put in your work order in this online system and you say what you want and you add any assets. And then they work on it overnight in the Philippines because that's where they're based. And they come back to you. And so they naturally can plan capacity because they know if I've got X customers, there's only so many work orders that can come in every day. And I just need to have enough people on the staff to make progress on those every day.
Yep.
And I just thought that's such a brilliant way of managing capacity and expectations. And if you wanted
It,
somebody who's going to respond in real time to you, there's another package for that. And that's way more expensive, right? Because they got to have capacity to have people who can chat with you at any time. It's a lower client to designer ratio.
right. Right. I think there's different ways to modify and design this model. I mean, I'm not claiming to have all the answers. I just want to ask the right questions
Yeah.
and try and point out where our rhetoric doesn't match with our business model. For example, how long have we been talking about? I've heard Joe Woodard talk about this. Maybe you've talked about it. I've talked about it. This idea of, well, what if we gave away the bookkeeping and the tax work to get the advisory? Everybody wants to move to advisory. Well, I
Yeah.
just read this fascinating book, Blake, called The Crux: How Leaders Become Strategists. And this guy, Richard Ramelt, wrote it. And he's written good strategy, bad strategy. So he's a strategy consultant. And I really like this, but his definition of a business model blew my mind. He said, in essence, a business model explains where revenue will be earned when services are provided free of charge.
A business
Now,
model explains where revenue will be earned when
when
services are.
services are provided free of charge.
Okay, you're going to have to walk me through this.
That's mind bending. If you didn't charge for services in a CPA firm, nothing, you didn't charge for advisory, you didn't charge for CAS, you didn't charge for tax, you didn't charge for anything.
Yeah.
What would you want to charge for? What would be the revenue model? This is the revenue model question. What do we want our customers to pay us for? Right now, some firms are answering hourly. Some firms are answering for a defined scope of work, plus change orders, from the Department of Paperwork if we go outside of that scope. Transformations are the answer, I think, for a subscription firm. I would charge for the transformation.
Well, I'll push back a little bit on that because I feel like that's transformation feels like so overwhelming. If you're a firm owner has been just doing services, like how am I going to go from doing one-off tax returns, to changing somebody's life? Like that sounds a little much for me, right?
We do it every day. We do it every day. We help our customers' businesses grow. We help our customers' businesses become more valuable. We help our customers get their kids into college. We help our customers buy vacation homes and other things that they want. We help our customers grow. We help our customers plan their legacy for when they die. If you do estate, none of these things are about the services. They're about transforming the customer. We do it every day. We're just like fish in water. Why? Because we don't think of it that way. Because we're limited by our language. We don't even have the proper language to use to describe subscription. It's one of the things I struggled with in the book, trying to explain these concepts with my old accounting mindset. Even my old GAAP mindset got in the way. We always want to allocate revenue to certain things, right? Well, in subscription, what the hell do you allocate revenue to? What does Netflix allocate revenue to? Do they get a list of everything you watched and split it up? No, it just goes into revenue because in subscription, you're creating lifetime annuities that are more valuable than the cost to acquire them. Yeah. So everything's about customer lifetime value. So you don't have to worry about the math of the moment. We bang Wall Street all the time for being too short-term, too quarterly driven, earnings per share per quarter, blah, blah, blah. They're too short-term. They don't make long-term investments. CPA firms are not only short-term, they're hour-termed. Yeah. They're trying to do this by every hour. It's crazy when you think about it.
The allocating of the costs down to every single hour.
Down to every hour. So when you say, and look, this is a great pushback. It's a great question. I've gotten it multiple times. Is it possible for a landscaper to provide a transformation.
Oh, I wish mine would, because all he does is come and blow leaves around, you know, and cut a few branches. But it's funny, we had some plants die in the yard and they just stay there dead.
Yeah.
And I'm going to have to go ask. Actually, we did ask. We asked, hey, can you like do something about this? And the answer is no. Like, they don't do it.
Which is
You know,
amazing because that's their
I,
profession.
I would happily pay whatever it costs, like charge me for the plant, mark it up, charge me an installation fee, just keep my plants alive and then replace them if they die, because it's Arizona, and half the plants you plant die. It's just
Mhm.
natural selection here.
Sure.
But yeah, most of the landscapers here don't do that.
So,
It's kind of
so,
amazing.
so let's imagine a landscaping business
Yeah.
that I think works at a far lower potential than a CPA firm in terms of impacting people's life. I mean, because if you look at people, they want to be healthier, wealthier, and wiser. Now we can keep them, wealthier, and I think we can impact their wiser too, and probably impact their health even by keeping them, financially healthy.
Hmm.
Um, but a landscaper, what if a landscaper came out to you and said, "I'll give you basic maintenance. We'll do basic maintenance, keep the yard up, blah blah blah," or I'll bring you up to neighborhood standards if your house maybe is a little bit older, not as well maintained or whatever, or I'll give you the best curbside appeal in the neighborhood, and we'll slowly transform your yard over time because maybe you plan to sell in a couple
Yeah.
years.
I would pay twice as much for that
That's a
right now.
transformation.
Yeah.
That's what I mean by getting pricing power. See,
Yeah.
that's not a common landscaper. None of them do that, by the way. If I found one, I would hire him in a minute because I hate my landscapers. But because
Hmm.
you're right, I have to go out and point stuff out to them.
Yeah.
Holy
Well,
crap, this is their job.
and this is the solution then. Like, bring this back to the firms, right? If you're a firm doing a bunch of tax returns, you can, instead of just doing the return for the client, right, get into everyone's moving into this tax planning stuff, right? Actually, like, say I'm going to have fewer clients, I'm going to spend more time with them, and we're going to talk in advance. We're going to talk at the beginning of the year about what they can do that year to reduce their tax liability.
Right.
And
And I
yeah,
I know there is a big movement to that tax planning or whatever you
I
want
mean,
to call it, tax
I
scenario.
and if you did it as a subscription, it seems like a no-brainer to me, and it's a smooth transition. It's a
It,
way to take a traditional firm, cut the number of clients, increase the fees, do more for the clients, right? With
it,
something you're already doing.
but see, I've got this built-in DNA that says when everybody's zigging, I'm going to zag.
Hmm.
I don't want to copy everybody else. I want to go to the market with what like Disney did with Disneyland. And all the experts that ran all the other parks in the country told them it will never work. It'll
Oh,
never work for these millions of reasons.
I love that story. Yeah,
I do
when
too. And he ends up not listening to them and
yeah,
hiring two of them as a consultant for
well,
Disneyland.
my favorite
Um,
story about that is Disney wanted to have just one parking lot at the south side of the park,
and
one
one
entrance.
entrance.
And he brought in all the theme park experts at the time, and most theme parks were more like glorified carnivals.
Yep.
And they said, "Oh no, you got to have parking all
All
around, and you got
around.
to have gates on all sides so that people can get easy access." Which, of course, would be a horrible experience because everybody's entering from a different point, and you don't have this consistent experience of going down Main Street. It's like it's impossible. Yeah, and he ignored them.
So I have a colleague, Paul Kennedy, in London, and he does business advisory. He says I like to start where other firms leave off.
Hmm.
So if you don't want him to do your tax work and your bookkeeping, fine. He's willing just to work with you on an advisory level. But the only way he'll work with you is if you do advisory. So the only way to get him to do the tax and compliance work is to be an advisory client.
Yeah.
One of the first things he tells new customers, Blake, is this: if you work with me, you are going to pay more taxes
If
because
you,
if you work with us,
yeah,
you are going to pay more taxes. We will do everything in our power to minimize your tax, but in the long run, my goal is to increase your wealth and your income. Would
and
you
you'll be
rather
happy
have
to
an
pay more
accountant?
tax.
Would you rather have an accountant that was focused on maximizing your wealth and income, or an
Yeah.
accountant that was focused on minimizing your taxes? I
Oh
will
yeah.
take the former any
Yeah.
day of the week.
Oh yeah. the marketer in me is jumping at the bit to play with that instead of just tax planning.
Everybody's zigging.
Yeah. Well, and
Zag.
this is where the wealth managers are really beating us because they focus on that. They talk about that. They may not all do it. A lot of it may be a scam in many cases, right? We see that with investment advisors and all that stuff, but
Right.
they talk it. And so I actually feel like it's a huge opportunity for accountants to like get into that side of helping clients grow their wealth.
Yep. I agree.
Mm.
I think it's what we need to focus on.
Yeah.
Just, Paul Dunn quotes a great line in the book that nature doesn't look for problems, it looks for potential. And I think we've become too focused on solving problems rather than seeking opportunity and pursuing opportunity. And so I guess I would ask, if you want to pivot to subscription, and I think you can do it whether you're hourly billing or value pricing. I think you can, if you're hourly billing, you can jump right over value pricing and go right to subscription. You're still going to have to learn some tenets of value pricing because some still apply. But I see no need to move to value pricing and then subscription. I think you can leapfrog right
Yeah.
over. Um,
Well, it's really, to me, and correct me if I'm wrong, subscription pricing is value pricing, but a portfolio of
Right.
clients or
It's
customers.
it's looking at the whole. It's a systems
Yeah.
thinking. It looks at everything. It looks at the portfolio, just like your investment portfolio.
Yeah.
You've got some very safe investments, some mid-risk investments, some high-risk investments. But as long as the portfolio overall is functioning, it's the same. And what I mean by that is, we know some customers are going to get audited. We know some customers are going to get more IRS or state notices than others. We'll just deal with them because
Yeah.
that's not how it's got a different profit formula. We're not analyzing the profit of every transaction of every hour. We're analyzing, here's the price where you're covered, and because we're covering you for no matter whatever it is you need, that's a form of insurance,
Yeah.
and that also commands a premium price. So all of that's built into the plus offering, and I think that commands us a premium price.
Yeah.
And I'm talking 2 or 3 times more than your nearest competitor.
Yeah. And it's important. It's very important to emphasize that you're not going to get screwed over on doing these audit defenses or doing these services because you know how many clients you have, you know how much revenue they generate on a recurring basis, and so you know how many staff you can afford. And
Absolutely.
all you got to do is make sure that you've got enough staff roughly to handle all that inbound IRS correspondence or audits. And if you know that, it doesn't matter if one client is quote unquote profitable on a cost allocation basis or not, because those are all imaginary allocations of
Yeah,
fixed costs.
when you think about it, customers and services don't have costs. Firms have costs.
Yeah.
So why are
Yeah.
we sitting here trying to allocate the rent and the toilet paper and the ink to every single customer based on some arbitrary hourly rate? It's crazy.
Yeah.
That's what I mean by the
Well,
portfolio. You just got to look at the portfolio and the cash flow.
yeah. Well, that's the great evil of cost accounting. It's applying, and this goes to the experience in firms, is if you run your firm under the same cost theory that industrial factories used in the 1800s, and you're going to create a factory type of firm, and who wants to be a factory worker these days?
It's the
Not those
holy
masters of accounting grads.
It's the whole economies of scale. That's what the
Right.
big firms believe, right? They're no different than Henry Ford. Well, the more cars we produce, the cheaper per unit, right? Well, think about that for a minute. You mean to tell me if if you produce 1 million cars as opposed to, say, I don't know, 500,000, that each car will be cheaper? But what happens to your cash? You're buying, 500,000 times four more tires, 500,000 more engines. You, there's no way. It's only because of the math of how we do margin. This is why Jeff Bezos said, "I don't look at GAAP. GAAP's useless. My metric is free cash flow per share." He
Yeah.
said, "Margin doesn't pay my light bill." It's a famous line from him from one of his Amazon letters to shareholders.
Well,
I'm not focused on margin. I'm focused on free cash flow.
and if Jeff Bezos thought like a traditional accounting firm, he never would have done Amazon Prime 2-day shipping because when you allocate the costs on shipping, most items on Amazon lose money when they are shipped 2 days.
That's right.
At least at the beginning they did, because Amazon had not yet built out this network.
Network.
So they were paying UPS and FedEx $15 to deliver a $5 to $10 item. And that seemed crazy to people at the time. But what Bezos realized is that as he built out this network of his own delivery fleets, that he only had fixed costs. He didn't actually have allocated costs per item. So they could do this 2-day thing, and they still lose money. Any item I think under $10, Amazon doesn't make money on when you buy it with the Prime shipping. But like you've said, Ron, people who subscribe to Prime spend thousands and thousands of dollars more every year
Yep.
on other products, on all
It's
their purchases.
It's about building a moat around their customers.
Yeah.
And
And,
yeah, it
and
was a brilliant move.
in my neighborhood, I live in a neighborhood, it's like a little master plan community with about, I think, 10,000 people that live in it. We're our own little, city in a way.
Hmm. Hmm.
And I just see those
They're all
cute,
over.
cute little Amazon vans driving around the neighborhood, going back and forth from that warehouse somewhere out in outer Phoenix all day long. They must have them coming every hour.
You get same
And
day stuff there because you're so close to a fulfillment center.
I can order same day multiple times per day. That's
Wow.
that's the experience of
Wow.
it. It's incredible,
That's amazing.
Yeah.
See, Amazon is so focused on the customer. It's amazing. Just making that experience better and better and better and better. And they keep plussing it. They keep plussing it. That way, when they raise their price, they don't have to blame it on inflation, rising labor costs, supply chain problems. They talk about all the value that they've added to Prime in the last 2 years or whatever it's been. And there's always something to talk about there. And what do we have to talk about when we're going to go to our customers now and raise the price because of inflation? What have we done to plus our offering in the last 2 years? The other thing that needs to be said, and you can talk to John Warlow about this, the author of The Automatic Customer and the guy who wrote Built to Sell, which is a phenomenal book. You probably read that when you were practicing, I would imagine, that, how to position your firm to sell it. And he says, normally an accounting firm sells for 1 times gross revenue. Now, sometimes it's 1.2, 1.1, sometimes it's 0.8, blah, blah, blah. But, on average, 1-time revenue. He said with subscription, because it's annual recurring revenue as opposed to annual reoccurring revenue, and there's a difference there, because it's more predictable, because you're starting on the 50-yard line every day, and you're not starting in the end zone where you have to, constantly fill the funnel with marketing and sales and all of that, because you're transaction-based, not relationship-based. He said, we're seeing anywhere between 5 and 14 times multiples.
SaaS
That needs to be factored into the profit formula of your firm, because when you go to exit, your firm's going to be a heck of a lot more valuable if you're subscription based, as opposed to value pricing. I've seen 2 and 3 multiples, 3 times, but I've never seen 5 to 14 like he's talking about.
No. Well, I think in order to get that, though, you're going to have a cost of labor that's extremely low. And that's why technology companies with recurring revenue print money. The costs are so low to run a software company. Like if you just stopped developing the product and you didn't hire any engineers and you just kept the people there. I mean, look at what Elon Musk did at Twitter, right? He came in and he let go at like 80% of the company, and the service still runs, and it's going to become profitable as a result. And that's why these tech companies are worth so much.
Yeah, I mean, they're definitely. I mean, they're digital, but take a company like Netflix.
Yeah.
Okay, Netflix doesn't cost any money for them to add a new subscriber to the roll, but think about what they have to invest in terms of content. It's massive. They have to hire the most expensive people on the planet.
It's true. What's interesting though is it's sort of it's like they spend so much because all they have to do is have a few hits every year and people will stay, right? But they don't know what's going to be a hit.
Well, that's a joke in the book about the accounting firm buying the Hollywood studio after a banner year, and an executive stands up and says, "Oh, we're going to make 10 movies this year. 2 of them, 2 of them are going to be blockbusters. 5 of them we're going to lose money, and the others will probably either break even or make very, very little profit. One of the accountants raises his hands, goes, well, why don't we just do the 2 blockbusters?
Yeah, that's I love that. I'm glad you brought that up. That was one of my favorite parts, one of my favorite stories in the book. And that's things you don't really know.
Profit
Yeah.
comes from risk.
Yeah.
And if we're not willing to take risk, if we're not, I love Blue Origin's motto, step by step, ferociously. I mean, we're just not ferocious enough as a profession. We've got these really mediocre goals of increasing utilization by 10% or growing top line by 20% or whatever. That's not inspiring anybody. Give people the reason they entered the profession. Let them help people, turn
Yeah.
them loose. And I think,
I,
the future's bright.
I wish that was the guiding principle at every firm. They talk about it, they talk about investing in their team and their people, but then when you actually look at how the business is run, if you look at the business model, it doesn't do any of that.
Yeah, and until they
And
change the business model, it won't. This
yeah,
is why I love, the Big Four. The Big Four does so many cool things. They really do because they got a boatload of money to invest in different initiatives, but they will not question their business model.
yeah.
Just blows my mind.
Well, the reason is it makes a lot of money for the partners,
For the Well, but I
you
don't
know.
think it's
Uh,
sustainable. But we'll
well,
see.
and that's where things could really change, right? Because the the partners rely on new partners coming in to buy them out and keep it going. And if the pyramid shape of the firm doesn't continue, like the margin on that labor can't flow upward. And
Right.
then the new partners will see the profits shrink, right? And then they might say, well, what's the point of this? It's this whole demographic change that we're going through as a country where we have fewer and fewer younger workers every year is a real threat to the business model of those big four
No,
firms.
if you're selling hours, it's terrible because an hour
Yeah.
is not leverageable.
And there's
It's just
fewer
not.
hours to sell, right? There's
Yeah,
fewer hours to
yeah,
sell every year.
absolutely.
So,
So in some ways, the Big Four partners had the same problem Bernie Madoff did.
yeah. I I wonder actually the Corn Ferry did a study on this years ago before it was trendy and projected out the labor shortage. They call it the talent crunch.
Mm-hmm, mm-hmm.
And the only large country in the world that is going to have a surplus of white collar workers is India. And so I wonder if we'll end up seeing the big four essentially become Indian companies because that's the only country with enough labor to keep the model going for now.
Yeah, it's really, yeah. If you look at declining birth rates, we're going to start losing
Yeah.
population, and 2060, whatever it is, according to the UN demographers. India is going to surpass China in terms of population next
Yeah.
year. China is going to lose 1.1% of its population per year for the next 50 years. They're going to shrink
Yeah.
dramatically. So they grew old before they grew really rich. I mean, they got richer, and they took 800 million people out of poverty, but they're going to have real
It,
issues. So it's going to be
yeah.
really interesting. Yeah,
And
if you were a betting man, you'd bet on India's long-term future
yeah.
before you'd bet on China's probably.
Yeah. And that's where I'd be if I was an accounting firm that was leveraging labor in this way, big four. I mean, they're already doing it. They've been doing it for a long time, right? With their offices there. But I feel like more and more of the work, it's not just going to be the low end processing that's happening there. They're going to actually shift most of the auditing, most of the compliance work is going to be done in India
And yeah,
for
I was
U.S.
talking to
companies.
Barry Melanson at Digital, and he was talking about them. He's very, very bullish on the Middle East, and he sees a big future for the Middle East, partly because their birth rate is exceptionally high.
Mm-hmm.
3, 4 births per woman, which is major compared to most other countries. I mean, Korea's at like 0.8%. We're at like 1.6%.
Yeah.
It takes 2.1% to just replace the population, right?
Yep.
Um, so he's
We,
very bullish on the Middle East, which I thought was very interesting.
we have more dogs than children in the United States now.
Yeah, I believe it. And we probably
Yeah.
spend more on them too.
Well,
I mean, there's dog
yeah.
subscriptions, Bark Box, and
Hey, I'm fortunate to live in a place with a decent public school. I do spend more on my dog, taking him to doggy daycare than I do on my son, funny enough. Oh, I
that's
guess
right.
I
You're
pay
going to
for
get
it.
backpack funding, right, with this new
Yeah.
law.
Oh, what's that?
Um, the funding for school, K-12 school,
Yeah, yeah.
right? They're backpack funding it, right? They're giving the money to the kid, not the building, not the
That's
school. You can
yeah,
go you can take your
yeah.
kid anywhere, right?
That's a very interesting and controversial development. Yeah, it's because the question is, if this money goes with the kid and the kid can take it, the parents can take it, the family can take it to any school. If it goes to a religious school, is that school going to get audited by the state to make sure those funds are being used appropriately because this is taxpayer money, right? So that's where I wonder how this is all going to shake out. We'll
Oh,
see.
people can take their Social Security money and put it in the church collection plate,
That's
and
true.
not all of that is what you earn through social. There's a huge welfare component in Social Security, so I think that's been litigated. Actually, what you
Has
just
it?
I think Maine had just
You
uh,
can do it.
had a case. Yeah, they can do it. Yeah,
What what what's interesting to me is coming from California, moving to Arizona during the pandemic times, is actually just how much better government services work here.
oh,
Even though
Arizona's incredible.
we spend less money, but the DMV is like partially privatized, and so I can make an appointment and get everything taken care of in 30 minutes, right? I mean, same thing with like just basically everything. I mean, the trash service, the water, the gas company came and proactively dug up my gas line so I wouldn't have a leak. It was
Wow,
a massive project, right?
wow,
Like they
impressive.
that wouldn't happen in California. They wait until something explodes or leaks or
Explode, yeah,
whatever, right?
yeah.
Yeah.
You
Um,
probably drove from California to Nevada. As soon as you cross the line, the roads are like 100% better. It's just
yeah.
amazing.
Well, what's really interesting about, I mean, Phoenix, if we can overcome our water issue,
Mm,
really, it's going to be an economic powerhouse because all of the manufacturing, well, not all of it, but a lot of manufacturing in China is moving to Mexico as a result of, like you said, there's demographic changes, but also just the change in the government. And like states like Monterey in Mexico, or cities, I think Monterey is a city, are becoming these manufacturing hubs. Chinese companies are coming there and they're building a huge interstate that's going to go from Mexico up through Phoenix, up all the way to Vegas. And it's going to be a real potential economic powerhouse,
yeah.
this area, if we can solve the water.
You got the Taiwanese semiconductor company
I,
building
I
there, and they've got plans, by the way, to build a second one in Phoenix.
I drove by that factory just by accident, and it is massive,
Massive, spending
massive.
40 billion on it.
Yeah, I
And they
mean
got
it's
plans to build another one that's going to do another type of chip. And their number one customer in Phoenix will be Apple.
oh, I'm
They're
so
the ones that
excited.
make Apple's new chips.
It's great for the economy, and we're gonna have some good Chinese food in Phoenix. Finally, I
Yeah.
miss that.
And
I
you'll
miss
get some
that.
Taiwanese people outside of, get them out of Taiwan before it's taken over. So that's a good thing.
But it's I guess I just want to finish up on like let's think positive, Ron. Let's think about the future of accounting. Like I believe, and I have to keep saying this every time because I think I don't say it enough, that like there's incredible opportunity in accounting.
Huge.
And even though we've got this talent shortage, yeah, we got this talent shortage. There aren't enough CPAs and not enough young people going in. But like if you want to go out and start your own firm and you want to serve clients the right way, you're not happy where you're at. I mean, it's pretty much you can do anything.
Never
So I
been
guess,
easier.
well, here's a question. Like Ron, let's say you know uh, you you find the fountain of youth, and you take a swig and you're 20 again or something, right? You're just like starting your career. What would you do?
I've been asked this before, and of course, I would never bill by the hour. I would never fill out a timesheet. I would niche. I would niche. I mean, from what I've seen in my 40 years in this profession, the most profitable firms across all professions have one thing in common: they're all niched. They're all niched. And I mean, my buddy who I was telling you about that does nothing but dentists. If I told you his net income, and he's a sole proprietor with 12 team members, you'd be shocked. He's making more than the magic circle firms in the UK, the law firms that pull down $6-7 million per partner
Yeah.
per year.
I couldn't agree more with you.
Not that money's everything. I'm just saying,
Oh, no. I mean,
if you're
it,
looking at profit, you can't ignore that.
you need to have fun. You need to
Absolutely.
balance your life and your work. And, money isn't going to make you happy, but it sure makes it a lot easier to be happy, right?
Sure. It gives you
Right?
freedom. It gives you
Gives you
freedom to
freedom.
do
Yeah.
what you want. Yeah. So
So,
I would niche now I would do subscription.
so listeners, if you have enjoyed this conversation with Ron Baker, be sure to pick up a copy of his book, Time's Up, The Subscription Model for Professional Firms, written by Ron Baker. And I should mention your co-author, Paul Dunn,
Paul Dunn,
who's
who's got the greatest first 7
Mm.
chapters. They're just wonderful. And by the way, the foreword written by Blake Oliver.
Yes, I did forget to mention that. Thank you so much, Ron.
You
it was
did a great job on the foreword.
it was an honor. Well, that's all the time we have. Thanks everyone for listening, and hope to see you again soon on the Earmark Podcast.
Thanks, Blake.